It's actually quite a boring answer. The way we deliver interest on gold is simply we're financing productive businesses.
Broadly, there are two kinds of businesses we work with. We lease gold to businesses that have gold inventory. So think of a jewelry store. And the other approach that we have for generating return on gold is we lend it to businesses that don't have gold as inventory, but gold as income. So think of a mining company. So in both cases, there's a return being paid by a productive business that we financed. We're providing something that's unique. There isn't any other way to do this.
What is the benefit to a company to lease gold? What's the value to them? And these companies, they're in the gold industry, they're working with gold, they're ultimately selling a gold product. If you buy gold and you're not immediately selling it, you have price risk, right? You're now exposed to the price of gold. You've got to manage that price risk somehow. So a lot of times these companies will offload that to a third party. That means more fees, more capital that's tied up just to manage that risk in my business, and a bunch of other complexities. What the lease does is it eliminates that entirely. We're just going to lease it to you.
We identify businesses that need gold, that use it in their day-to-day operations. They're willing to pay a premium, which is effectively a rental payment every month for that gold. We in turn pay yield to our investors, and their gold is only tied up for that same 1-year rental period, so to speak.
That eliminates the need to hedge. It simplifies the financing need for businesses in the gold and silver industry.
People sometimes ask, what happens to my gold while it's being leased to this third-party business? Don't they use it or sell it or consume it somehow? Does it go away? Actually, the answer is no, because the gold we lease to any business is only a portion of the gold that they have in their vault or in their premises or in their system. The total ounces of gold held by the third-party business never falls below 110% of the number of ounces we lease to them at the beginning of the lease term. So whether they're fabricating or selling or using the gold in any way, as they use it, as it goes out the door, as it's fabricated, they are immediately replenishing it. There's never a period where you lose title to your gold. There's never a period where the third-party business leasing gold has anything less than the total number of ounces we lease them up front. This is throughout the lifetime of the lease, and it's something we monitor very closely.
Leases are off-balance sheet, highly secured, non-credit finance. So you own the asset, you're simply renting it to a business that needs it for inventory or work in progress.
Monetary metals leases are generally 12 months or less, and historically they pay anywhere from 2 to 5% yield on gold. You get paid in gold ounces every month in your client portal. You can see your ounce total growing. Throughout that year, the title to your metals remains with you. And best of all, your gold is insured throughout the lifetime of the lease. Our gold bonds are generally used to finance mines or other production in gold.
The bonds are traditional debt finance. We're extending credit to a qualified business that we've conducted the due diligence on. We're not really reinventing that wheel.
Now, unlike our leases, gold bonds generally have a longer term from, let's say, 3 to 5 years. And also, unlike our leases, gold bonds are only available to accredited investors. The reason for this, of course, is that there is a higher risk profile with respect to bonds, but there's also generally a higher yield, frequently in double digits.
So anybody who says, I'm going to pay a return without risk, run. That person's either a fool or a liar or both. We're about, let's understand the risk, let's disclose the risk adequately, and let's have an interest rate that fits.
When people talk about how we minimize risk of loss of gold, I generally say we have 4 ways of doing that. First and foremost is our financial and legal due diligence. Before we lend to any customer, we generally do a deep dive and really kick the tires into their financial health and well-being. We also have a robust legal structure designed to minimize any risk of loss and provide collateral on the part of the third party if any loss occurred. third is our insurance structure. We require our third parties to maintain insurance. We at Monetary Metals maintain insurance as well. So throughout the life cycle of any investor transaction, your metal is insured, whether you're shipping it, whether it's in a vault, whether it's with Monetary Metals, whether it's with a third party. And finally, we have extensive reporting requirements. Once we have leased metal to a third party or we've loaned metal to a third party, we monitor it closely, and we have a variety of inventory and reporting controls that really make sure we know where those ounces are at all times. As a Monetary Metals investor, you really have control over your gold. You really have control over the decision whether to participate in any particular lease or bond. Again, you can purchase precious metals from us. You can send precious metals to us. Once that metal is in our system, we offer lease opportunities, we offer bond opportunities. You can look at each one individually, and you always have the right and the ability to opt out or to opt in if you choose to do so. Best way to get started with Monetary Metals is simply to go to our website, monetary-metals.com. Reach out and contact one of our relationship managers. He or she will walk you through the process. It's simple, it's easy, it's relatively painless, and you'll be up and running, earning yield on your gold instead of paying points to store it.
Once you get through the account opening process, you're going to select which way you want to fund your account. You can fund your account with metals you already own. You can have those shipped to us for free, or you can simply fund with cash, right? You can just purchase gold from us. Once your account's funded, you're gonna receive a login to your online client portal. And that client portal, that's your hub, right? That's your investment account at Monetary Metals. That's where you're gonna see how much gold and silver you have, what's the dollar value of that metal, and it's also gonna show you where you can earn a return, right? So you could navigate to the leases tab. And in that tab, you're going to see all the available leases that we have on offer in the marketplace. Each of those leases are going to have a different rate of return, a different term, a different set of risk return profile that you can review, and you can select to participate in those leases, or you can decide to opt out of any leases that you don't want to participate in. Whenever we offer a bond, you're going to receive a notice that a bond is available in the marketplace. Now today, our bonds are only available to accredited investors. These are private debt securities, so you would need to be an accredited investor in order to participate. But very similarly, the bond becomes available. You're going to review all the different risks associated with that investment and ultimately decide if you want to participate or not. Everything exists in the online client portal. You can see your balances, what you own, what you're invested in, how much are you earning, and of course, how much you've earned over time, which is the best part. There's nothing like receiving interest on gold every month and to see that gold compound over time, right? That's really the magic moment, as it were, at Monetary Metals.